A lot of people have the mistaken belief that you have to put 20% down to buy a house. That is not true. It hasn't been true actually in decades. And so it's crazy to me that that is still floating around there. Now, I know you didn't believe in that myth, but a lot of people listening may believe in that myth. Like, oh, I need to put so much down. And I literally ran into somebody the other day and they're like, I don't have to put 20% down. And I'm like, no, absolutely not. You do not have to put 20% down. He's like, how much do I have to put down? And I said, well, somewhere between 0 and 5%. He was like, really?
I would like to get a house.
Okay.
Stay in there a short time period, and depending on how the house is, make certain tweaks to it, and
Okay.
then rent it out when I leave.
Okay.
But those tweaks I would like to make are literally just things that, I think would make the house better. And, when somebody's looking to rent it, they'd be like, well, I've never seen a house before.
Hey guys, and welcome back to another episode of Financial Mastery Simplified. I am your host, Jax or Jacqueline Crider, whichever one. And we are excited today to have Dromonte with us. He is an amazing guy. He has done so many different things in like the marketing space. I'll kind of in a second let him tell you a little bit about himself. But I'm super excited to have him on because he and I have had several conversations. It's been really an exciting thing to sort of learn what he does and doesn't know about the financial space and kind of how that has shaped some of his questions and his perspective. And so we're hoping that this conversation will just kind of like maybe open your eyes and allow you to not be afraid to ask questions and to be, eternally curious, etc. So welcome, Dromonte. Tell us a little bit about yourself and why you're excited to be on the show today.
Thank you. I'll start off with why I'm excited. I'm excited just because the conversations we have had, I think are perfect. I think others should hear about them. And I also feel like I ask really good questions. That's why I was like, yeah, I learned a lot of things that I didn't know that I didn't know. But to speak a little bit about myself, I'm the CEO of the Uproot Agency. We're a full service digital marketing and PR agency. And so what that looks like is we basically just set in systems for businesses to make more money or to find hidden revenue sources. And what we try and really ideally do is get them more money and take on the manpower of bringing in that money. So that way, like the business owners or whoever is supposed to be doing something can do something else.
Sure.
And I've been in the marketing space for 11 years now. I started in 2013. But beyond that, I own a clothing brand. I've assisted other people with some businesses, and I've done a lot of sales as well. I used to be in debt relief, which is really, really funny considering you just said you have to get sensitive information from people. I did door-to-door debt relief. So we were getting, what do you call them? Socials at the door. And then we go inside the house. But yeah, so that's pretty much me. I'm a workaholic, and I'm constantly learning.
Yeah, no. And for those of you who obviously don't know Dromonte, don't, etc., he talks about being in the space for 11 years. But why don't you tell them how old you are? Because you have been an entrepreneur for a very long time. Like you were not very old when you started that process, were you?
No. So I'm 26 right now and a half, maybe. But no, so I'm 26 right now. I started when I was 15. And honestly, I got to start with a great client. I got to start with the LASIK Vision Institute. A lot of people do start small business, which is the primary target audience for my clients. But I got to start with a corporation.
Yeah. No, but that's awesome. And I think a lot of people, the reason I say that, I point that out, is not to make you feel less than, but to show people that a lot of times they believe that they're not powerful enough to do big things like what you're doing, but you are powerful enough to do big things, even when you're young, even when you're 15 years old and you think to yourself, man, like, I don't know if I can do hard things. You can't. But a lot of it comes with asking good questions and that curiosity, right? Like not being afraid to kind of dig deep and to shoot for the stars, right? Like, you don't know what you don't know. So ask the questions, take the opportunity, take the risk, because sometimes, it really pays off. And I think a lot of people have a lot of fear, right? Like surrounding that, because they're like, well, and then even myself, like I have major imposter syndrome. I mean, for any of you who haven't really looked at my background or know anything about me, I'm 41 years old and still I joke all the time, I'm still trying to figure out what I want to do when I grow up, right? Because there's definitely moments in my life I'm like, man, am I doing okay? And that saying like failing forward is so true, right? I mean, you just have to kind of test it out, try it out. As weird as it sounds, my toddler has probably had more effect on me in the last year than almost anybody in my life, because of how she constantly fails forward, right? Because when you're a little kid, they constantly are like breaking things, or like trying things out, and they're not afraid to break something. Whereas adults, we're afraid of that. We're like, oh, I don't want to do that. That might not work out for me. But she's not afraid. She just go and do it. So I'm like, man, I need to take a page out of her playbook, man. She's doing better than her mom over here, so it's fine.
Yeah, there's a Walt Disney quote, and it's fun to do the impossible. But I don't know what's impossible yet, so it's fun to try and figure out what is.
Well, and the truth is that if you have the right resources, the right people in your corner, you're asking the right questions, there really truly isn't anything that's impossible. I think we just limit ourselves. And if you actually ask most of the people around you, you would probably find that a lot of them find you more powerful than you know, right? The fact that I actually was heavily encouraged by multiple people to even start this podcast, because they're like, Jax, you have a voice, like you really are passionate about things in the financial space, right? Every time AC, but AC says about me, he says, you're the only person, Jax, who could get fired up all by yourself. Like no one else is in the conversation with you, and here you are, like fired up and like excited about whatever it is you're talking about. And I said, well, I mean, I really love to help people. I like to answer their questions, right? To help them understand things, etc. And in the spaces that you're in, it's the same. Like I love that your goal and what you're doing as a business is to let that business owner be their highest and best use, because it's another thing that we mistake and we do wrong as business owners, and even sometimes as employees. I know you still have to do what your boss says if you're an employee, but what is your highest and best use, right? What can you figure out how to delegate, or maybe potentially push to somebody else, right? Ask your boss, hey, this may not be my highest and best use, etc. And a lot of people just mistake that. So I love that that's something you're passionate about, because it's something I am quintessentially not great at. I am a recovering control freak. I know that surprises everyone listening and anyone who knows me. No, not really.
I tell people all the time, though, sometimes there's a difference because somebody will be like, oh, I'm a control freak, or I have anxiety. And usually I hear a lot of oh, I have anxiety, especially business owners, because they're giving me their baby to basically help it grow.
Right.
And I'm like, hey, it's okay to want all this control. It's okay to have anxiety. You care a lot. Like, and that's really the kind of the core thing. But you care so much that you find somebody who can contribute more than you can.
Right.
Um,
Absolutely. Well, and I think a lot of people just mistake that you really can't be great at everything. It's just like it's not reasonable, right? Like that old adage. I don't know if you've ever heard the saying "Jack of all trades and master of none" is kind of true. Like you really can't be the master of anything if you're just the jack of all trades. And I mean, forever, I think that's what I did, is because I could be really good at most things, but I couldn't really be the master at just like one or two things. And so I kind of had to scale myself back and say to myself, okay, you really have to hone yourself in, etc.
and I think that's why I enjoy talking to you, because I know a lot of things, and not to even toot my own horn, it's because I'm a nerd. I research a lot. So
Yeah,
typically
me too.
I know more than most people do. But I will always tell somebody, yeah, I really don't know that much, though. So that's why I like talking to you about finance.
Yeah.
Because typically, even though, again, I'm young, so amongst like my friends and peers, usually I know the most. But then I also do with older business people. And even then, sometimes I know things they don't know. And then all of a sudden you come and I'm like, wow, I thought I knew 1%, but I don't even know if it was 1% of 1%.
Well, I think we talk specifically, obviously, for those of you who don't know, mortgage is my main job. That is what I do as a living, and I'm very passionate about it. But I'm also passionate, like, to kind of give you the big perspective, for me, it's so much more than mortgage, because mortgage tends to exhibit the largest financial purchase and debt that you hold basically in your life. And so, with that, in my mind, comes this great responsibility of not only helping you achieve this big financial goal that you have set for yourself, but also how it affects the rest of your life, right? Is it helping you accomplish what you're looking to accomplish? Because so many people in my space they're not about that. They're not about education or whatever. Okay, great, Dromonte. You said you want to buy a house. Perfect. Okay, great. You said that this is what you want to do. Great. I can qualify you that way. I'm just going to throw you in here and that's it. Right. And for me, it's so much bigger than that, because the truth is that when push comes to shove, you are not the expert in the space, right? Like you said, as nerdy as you are and as much as you read and whatever, a lot of the questions that you and I were having about mortgage, and I was challenging your thought process, you were like, oh, wait, hold on. I didn't really think about it that way. Well, of course you didn't. Not to be rude, but like, this is not what you do every single day of your life. And you shouldn't think about those things every single day, right? Like that is not something that should be constantly running through your head. And not only that, but because a lot of the situations that we deal with are on the more complex side, there is a lot of aspects to them, right? Lots of different perspectives and different ways that you can look at. And part of the reason I even created Financial Mastery Simplified is I absolutely hate in my space that the talking heads, they think the general public is too stupid to understand complex things. And so what they do is they say, let me just tell you this real simple thing that's real easy for me to sell you on, and we're just going to focus on that. Because all that other stuff, like, it's too hard. Like, you probably aren't going to get it anyways. And my attitude is, if you break it down simply enough and you just give the big rocks, not all of the detail and all of the context, because that's just a little bit too much and it gets a little too in the weeds for people. But if you just give that context, most people can either one, grasp it, or two, will then prompt to ask more questions and say like, well, okay, but if that's the case, then what about this? You see what I mean? And then they're now engaged in this conversation, and that's what you want. Because I say all the time, and it is the truth, when you make that mortgage payment, I'm not the one stroking the check every month. You are. So great, we had this whole connection and we did this whole thing for, 30 days, maybe 6 months, depending on, how long you went through the process and all the things. But then I disappear. And I mean, for my clients, we're still a resource. We tell them, if you've got questions, call us, etc. But for most mortgage professionals, that's it, right? They did their thing, they handled their thing, and okay, we're done. Like, that's it. We're sorry, Dromonte. Hope you picked well, right? And I don't know. I just don't believe that that's the way that it is. So I know it's a long way to explain, but
stay tuned. We'll be back right after this message from our sponsors.
Welcome to Financial Mastery Simplified, your go-to podcast for making smart money decisions. We break down complex financial topics into easy-to-understand advice you can use every day. Our experts cover everything from budgeting and saving to investing and retirement planning. We give you the tools to take control of your money and build the future you want. With Financial Mastery Simplified, you'll feel informed and empowered to make the best choices for your financial health. Tune in to Financial Mastery Simplified on your favorite podcast platform. Start your journey to financial confidence today. Welcome to House U, where we believe in the power of education. At House U, we're more than just a brand. We're your partner in home ownership, dedicated to educating, equipping, and empowering you every step of the way. Education is at the heart of everything we do. We offer comprehensive resources designed to make home ownership simple and accessible for all. From understanding mortgage options to mastering home maintenance, House U provides the knowledge you need to make informed decisions with confidence. We host workshops and seminars, bringing together experts and community members to share insights and build a stronger, more informed community. Because when you're educated, you're empowered. House U, home ownership made simple for all. Visit our website or contact us today to start your journey with House U. Empower yourself with knowledge and embrace the joy of home ownership.
Now back to our conversation.
No, I 100% agree with that, because in the marketing space, it's very much kind of similar. So in the marketing space, there's a lot of people who will use a big word for a simple process in hopes to make it seem really complicated so they don't have to explain it to you. And that's something that a lot of people just do out of fear, because like, well, if I tell you how to do it, you can go do it yourself. I mean, yeah, that's true. But when you're paying for marketing, you're paying for expertise, and you can't really explain that part, which also goes into me knowing maybe 1% of 1%, because the only reason you were able to explain certain things to me were just because you have the expertise to see these different situations. because specifically in my case, I think what prompted it was, oh yeah, I was like 20% down payment, so I don't have to do PMI. And
Yeah.
you know, I feel like, and this is my opinion, but I feel like most mortgage brokers would be like, okay, cool, yep, let's do that. And then you were like, are you sure? And I was like, pretty sure.
Oh yeah, I was gonna say we challenge that thought process all the time.
Yeah.
So first of all, we'll just get it out there. A lot of people have the mistaken belief that you have to put 20% down to buy a house. That is not true. It hasn't been true actually in decades. And so it's crazy to me that that is still floating around there. Now I know you didn't believe in that myth, but a lot of people listening may believe in that myth. Like, oh, I need to put so much down. And I literally ran into somebody the other day and they're like, I don't have to put 20% down. And I'm like, no, absolutely not. You do not have to put 20% down. He's like, how much do I have to put down? And I said, well, somewhere between 0 and 5%. He was like, really? And I was like, yeah, it just depends on where you want to buy, what kind of loan we're doing. Like, you know, there's a bunch of different factors here, but yes, absolutely. I said the most common is really about 3 to 5%. That's about the most common minimum percentage to put down as a general rule, right? But like you were saying, well, I thought, oh, this is the best way to do it. But as I pointed out to you that day, okay, cool. Have you thought about, right? Because everybody thinks, oh, PMI is the devil. And it's not necessarily like anybody loves paying extra insurances that they, you know, that they don't want to have to pay. Like that part is true. However, a lot of people don't realize that it is potentially tax deductible, just depending on how you file your taxes, right? They don't realize that there are other options on other vehicles you potentially could be placing that money in. You could possibly make more money doing that, right? That's something else you could do. Or like I was pointing out to you, and for those of you who are listening, you know, a lot of people have hopped out of the market because they're scared to death. Interest rates are high and this is horrible. This is a horrible time to buy. It's what the media is selling. And pardon my French, but it's utter bullshit. It is not necessarily the perfect time to buy for everybody. That part is true. But what most people have to remember is we technically really still are dealing with an undersupply situation, meaning we do not have enough houses for the amount of people who actually want to buy them. And so the reason that we're not seeing what we saw for years, like in 2020 and 2021, is because so many, specifically millennials, are holding on the sideline, either living with parents, they're still renting, they're doing some kind of cohabitation situation where they've got like multiple people all living together, right? There's something is going on like this that they're holding at the gate because, again, they have bought into the myth that a 6, 7, 8% interest rate, whatever, is horrible. That's a horrible interest rate and whatever. And the funny part is if you've done any research, and I don't know if you have, historically speaking, those are actually not bad interest rates. They're not great, don't misunderstand me, but they're not bad by any means. They're historically about average for what we typically ride at. So again, not bad. But again, that's not what everybody believes. And so they're waiting on the sidelines. Well, what's going to happen when they all join the market again? Well, you're going to now be in the bidding wars again. You're now going to be making, you know, things over list. And this is the other reason I don't like bidding wars. I told you, and it's true, you might have to make an offer substantially over list, and you may have to guarantee that amount you're paying over the list price of the house. And what I mean by that is like if the house does not appraise, so if the value doesn't come in, you may be required to pay that extra amount you agreed to pay out of your pocket in cash. And yes, that is how that works. It's called an appraisal waiver, okay? That may be the case, but it's more than that. How good of a decision do you make when you're emotional? I mean, I'm asking, how good of a decision do you make when you're emotional?
No, at 0.
Right. And that's most people. You're not alone. Like most people, when they are making a very emotional decision, and that's why any good counselor is going to tell you, don't make a decision about your marriage when you're crazy emotional, right? Like don't get divorced when you're in a crazy emotional state, or don't quit your job when your boss just said something asshole to you and pissed you off. And now you're like, screw this job. I hate it. And I'm going to walk in there and tell them where you can stick it. You know what I mean? Like, Don't do that. But that is what happens when there's 8 million people bidding on one house. Because what other choice do you have, right? Like you, and homes historically, the reason that we also struggle in our space is like my part of the space, so the mortgage piece itself, is very logical. It's very math-based, which is great because it's just numbers. But because a house itself is so personal, it's so like tied to like our identity, because it's not a house, it's a home, right? It's where we raise our children, it's where we do things or whatever. Because it's so emotional, you can't help but hold some very emotional ties when you're making offers on houses. It's not easy, right? It's not easy to strip that emotion out. And now, how much harder is it when you have a limited time window? Well, cool, Dromonte, you got to make a decision right now, because if you don't make a decision right now, there's 40 other people who want to buy this house. And then once you make the decision to bite the bullet, oh, it wasn't good enough. They didn't like this or whatever. They picked, somebody else, whatever. I mean, you know what I mean? Like, my heart broke in 2020 and 2021 for my first-time home buyers. It broke because I could see and I could feel the fatigue on them. And honestly, I get it. I mean, when I bought my first house, that was not the way it was. Like, I could have taken a week to decide if I wanted that house or not. It was no big thing. But anyways, yeah. So, I mean, it's just, it's difficult. So that's the other reason I told you consider, timing and stuff like that, because it is like, actually, I know a lot of investors who are buying up houses as we speak, a lot of them right now, whether it be in cash, finance, whatever, because they know what I told you, which is interest rate. If the rates drop, I can refinance that, right? Like, I can help you fix that problem. That's not a problem that's hard for me to fix. What I can't fix is if the inventory is just nil and you can't get a bid good enough to get into that house. I can't fix that, right? I can't magically wave a wand and say, hey, Dromonte, it's great. Look, I just made 100 more houses. Go pick.
Yeah, and I think it also aligns with, like, what is the end goal, too.
Yes.
Because putting 20% down didn't really align with my end goal. It aligned with more like a midpoint goal.
Correct.
And that midpoint goal was not more important than the end.
Yeah, that's another thing. I mean, and the truth of the matter is like, when it comes to anything financial, a lot of it is about knowing yourself and knowing your goals. And honestly, I give you hats off that you have thought that far in the future and, like, thought about your goals and things like that. That's another thing, though, that is our job, is to challenge your viewpoints. Because the truth is that a lot of times we can see things that you can't see. Like, most first timers, it's a quintessential mistake that they make if they do have more money. Like, if they just have the minimum, that's a different situation, right? Like, maybe they're just trying to get in and they are going to have to chunk down most, if not all, of their cash. But if they have options, I very rarely recommend them to put down all their money, because you think when you walk in that house and you buy it, you're like, this house is great. I love this house. It's so perfect. I love it. And then after you live there over time, man, I didn't realize it was going to bother me so much that this, I don't know, whatever it is, this is ugly, or this doesn't function right, or whatever. And then that necessitates a change, right? Like, you want to change it. Well, changes cost money, right? And maybe for some people, they'll just deal with it. I mean, you have those personality types or whatever. My mom is interior design, so that's not my personality type. I won't fix it. So I need, you know what I mean? And so you need to have some cash to be able to do some of those things.
Yeah, and it's funny that you say that, because the end goal is freedom, but that might lock me in if I were to do 20%, because I might have to sit there and be like, I don't like this, but I'm going to deal with it. And that is the exact opposite of what I like to do.
Right. And so again, that comes back to knowing yourself. Then this is something else that you should consider for Texas specifically. So Texas has some very funky laws. They are called Texas A6 laws. They're actually a part of our Constitution. If you ever hear somebody talk about Texas A6 laws, what they're talking about is cash out home equity laws. And because of how Texas was created and how Texas, like its roots in essence, for a long, long time, until I think it was somewhere in the late 80s, you couldn't take any equity out of your house. The only way you could get it was to sell, period. Mm-hmm. But now, because of Texas A6 laws, the maximum you could ever take out is 80% of the house value. But that's on any loan you have. So let's play a scenario out. So you buy your first house, you chunk 20% down. Great, right? Your 80% of the house value is what you're buying it at. Okay, great. Now, 2 years later, you want to make some improvements, but you haven't quite built back your savings yet because you put the 20% down, and you now want to make some improvements. So the only way you really could pull out any money is by refinancing it or doing a home equity loan and accessing that cash, right? That way. The problem is that you're capped at that 80% mark. Now, maybe you have, maybe because of the property has been improved and obviously you've been paying down the loan a little bit here and there or whatever, right? You'll have some equity, but will you have enough? And if you still had that money in your hand, you would never have had to do any of that anyways, right? Mm-hmm. Like you would have been able to just to access it and tap it. And let me tell you another truth. No mortgage company is ever going to be pissed off about you paying more. There's not. You want to pay more money? Great. Pay more money. So if you decide later on, like, hey, you know what? I don't need this money anymore. I do want to go ahead and put that money towards my mortgage. You can do that at any point, right? There are some very rare cases where you're not able to pay extra called prepayment penalties. They were very popular before the 2008 crash. They are very rare anymore. I mean, I'm not saying that they don't exist. So for those of you listening, it's always something you want to check out and ask your professional is, does this loan have a prepayment penalty? I would say that in today's market, 95% of loans don't have them. It's very rare. It has to be a very specific, unusual product type typically to carry what's called a prepayment penalty. So most of the time you can pay extra. Not only can you pay extra, but now you're saying, yeah, but the whole reason I would have put more money down is not just to help me avoid private mortgage insurance, but also because I wanted a lower payment. Mm-hmm. Fun fact. If you pay a large chunk, not like a couple $100s, okay, like $1,000 something. We're talking like 20 grand or something, right? If you pay that in a lump sum towards your mortgage, you can pay a small fee with most mortgage companies I would say that most servicers offer this. You can do something called a recast. Okay. So what happens is you say, hey, I got $20,000. I want to put it on my loan, but as opposed to shortening the amount of time I have to pay, I want to have a lower mortgage payment every single month. Mm-hmm. Usually you pay them somewhere between $250, $750, and they do something called a recast. That means they take the new amount of money owed and they recast it over the amount of time you have left on the loan, and they lower the payment down. So most people don't know that's an option, and it is.
And I was that the one where it was like, this could possibly be a 30-year mortgage, but paid in 15.
So no, recast would mean that you pay the exact same amount of time. So for instance, if you put it towards principal, you would basically ask for them to stretch it back out. And so if you have 352 payments left, right? You did it on your 8th payment cycle, then it would basically keep that same amount of time. It would just reduce the amount of money you have to pay per month. Okay, mm-hmm. So it would reduce the amount of debt load you have per month. If that's not what you want to do, but you want to pay it off a lot quicker, then you can pay extra to principal either in a lump sum or a monthly amount, either one, okay? And that's paying down the balance, and you actually can control your interest rate. This is why I tell people all the time, interest rate's not the only thing that matters. And they're like, it is, it's the only thing that matters. And I'm like, well, marketing has done a really good job of convincing you of that, okay? Really good job. But just so we're clear, that's not true, because you can technically control it. Because if you pay extra on your loan every single month, you're not paying the amount of interest that is listed on your loan, are you? Because you're paying a lot less time. You see what I mean? And so could I tell you exactly what interest rate is going to look like? No, and you'd have to consistently be paying extra, mm-hmm. right? But this is what I can tell you. So when I bought my very first house back in, I'm trying to think, I think that was 2005. In 2005, when I bought my very first house, my mortgage payment was $1,100 a month, I think, roughly. I made $250 extra on my payment every single month that went directly to principal. Had I continued doing so, that house would have been paid off in 18 years. So my 30-year loan would have been reduced by 12 years by paying roughly 25% more.
Mm-hmm. That's what I was trying to math. I was like, that's close to 25%.
Yeah, ish. Pretty close. Like, we're doing rough figures, right? But yeah. Mm-hmm. And so a lot of people are like, wow, holy cow, why is that? And I always tell people, and this is the best analogy I can ever give, is if you imagine 2 triangles, equal size, one pointing toward the ceiling and one pointing toward the floor, and you shift them together, the top section is how much interest you're paying at the beginning of the loan, and the little teeny tip of the triangle on the other side is how much you're paying towards principal. As that starts dropping, it starts shifting, right? Which is why I will argue until I'm blue in the face. So if you're on the other side of this equation and you have had your loan for a really long time, right? Like you've been paying on that sucker for like 25 years. You got like 5 years left. Don't pay it off. You've already paid almost all the interest. The bank wants you to pay it off because they've already gotten all of their money. Don't do it. Like literally, you would do way better investing the money or whatever because all your interest more or less at this point is pretty much paid. So you just want to pay it for your own peace of mind. Financially speaking, it's actually a bad plan. You should not do that. You'd be better off the other way. Pay it like as much as you can early on. But a lot of people just don't think about that. They're just like, oh no, that's not the case, blah, blah, blah. And I'm like, okay. I mean, again, you do you. I'm very free form of you do what makes the most sense for you. But yeah, I mean, a lot of people just don't recognize or realize that those things are the case.
Yeah, and because even as you're speaking right now, I'm still questioning it. I'm no longer questioning the 20%. I spent 2 weeks talking to people about it and sharing it with them, and they were all like, "Wow, really?" And I was like, "Yeah." So this is pretty cool. Now I think I'm interested in either paying it off early. But that also brought up another point where I've heard other people say before, but this was more of an investment conversation, is why are you paying it off?
Yeah. Oh, a lot of people, if your ultimate game is to own a lot of real estate over the course of time, you actually don't necessarily want to do it because you want the offset in rent, right? So like the mortgage payment and the rent payment. So you don't necessarily want to make a whole lot of dollars because you'll be taxed on those dollars, right? Like you are going to have to fill out a tax form that is typically called a Schedule E, where you're going to put any rental properties that you own and you're going to offset the amount of rent you make with your expenses, which is going to include, but not limited to, mortgage. Okay. And so if you can offset those amounts, what most investors are looking at is their end game is what the property value itself will hold out to be, right? And when they actually get to retirement, they'll be making, that house will be paid off, and that will be income earning for them, a passive income stream, right? And so there's a lot of different thought processes when it comes to that. So I'm not necessarily saying you pay extra. Again, this is a conversation where you have to know yourself. Right? Like, what's your goals? What are you looking to do or whatever? The other reason a lot of people don't put 20% down is because, like, let's say, for instance, for you're fairly young or whatever. I don't know this for a fact. Are you single? Are you married?
No, I have a girlfriend.
Okay, but you're not married yet, right?
No.
So you don't have like a family and all that kind of stuff or whatever. So you might be up for moving more frequently. So what a lot of people do is they put the minimum amount down, whether that be 0 to 5% or whatever, right? They move into that house, they live there for, let's say, 6 to 12 months, and then they buy another property as a primary residence. Because again, you have a lower percentage you are required to put down on your primary home. For buying investment property or a second home, you are going to bear a higher interest rate. And people say all the time, well, why is that? That doesn't seem fair. It's a risk factor. Literally everything in mortgage is risk. Everything. So when people say to me, well, that just doesn't seem right, I'm like, look, it is statistics and numbers. That's it. And risk. Like it has nothing to do with you personally. It is all about bottom dollar and how that's going to look over the big picture for them. That's really all they care about. And if you think about it logically, it makes sense. So if you own more than one house, okay, so you own a primary house, let's say you own a primary, a vacation house, and you own a rental property, right? You own all three of those. And stuff starts going really downhill and you're not making much, if any, money anymore. If you have to let a house go, which one's it going to be? It's probably either going to be vacation or rental, right? It's not going to be where you live all the time. Like that's where all your stuff is and where your family may or may not live. You know what I mean? Your dog's house, like all that stuff. You know what I mean? Like that's just the way that people feel. And so a lot of times people don't think that through but if you literally take anything in mortgage, I promise it's either math or it's driven by back end investments. Like I don't know if you remember you and I talking a little bit about how sometimes if you put less money down, you actually have a lower interest rate than if you put more money down, and kind of how much of a mind mess that is, because you're like, that doesn't make sense. And I'm like, no, I realize. And again, this has to do with mortgage-backed securities and how they're trading and what they're trading at, because it's going to be an indication of what the lending market is going to do and hold and what interest rates are going to be offered. And most people just don't understand that. In their mind, If you put more down, then again, the risk factor is lower, so you would get a lower interest rate. Well, if there's a lot of investors looking for lower down payment choices, then that interest rate might be lower. As crazy as that sounds. It just depends on what the mortgage-backed securities are doing that day.
Yeah, I feel like a lot of people are going more for just whatever the percentage is, but not knowing what the percentage means.
Well, that's the other thing. So I've had a lot of conversations with people how people believe that buying a house and buying a car are similar. And the reason they believe that is because it's the most similar large purchase, right? Like it's the second largest purchase that most people make. And it's probably what most of them have already done prior to buying a house. So of course, right, you're going to try to relate it or correlate it with something that you understand or you get most of. So yeah, you're going to correlate them. The challenge is that when it comes to like car financing, and I'm not the expert on car financing, so if I'm misspeaking here, I apologize, but there's not that many choices with like car financing, right? Like as far as like products go, or yes, if you put more down, you might get a lower interest rate. You know, you've got different terms of how long you've got to pay. These things obviously affect it. But what happens in mortgage is there's so much more complexity.
Stay tuned. We'll be back right after this message from our sponsors.
Hello, and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4-693-733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified course and resource platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified course and resource platform. Start your path to financial independence now.
Now back to our conversation.
And again, this goes to how we've marketed to the general public for years. The easiest thing to market to people was interest rate, right? So that's why everybody got it beat in their head. Rate, rate, rate. That's all that matters. That's all I care about. Rate, 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 right? Because again, it was the easiest thing for the consumer to do. But I'm going to go one level deeper. I was having this conversation with somebody the other day. It's not just, it was easy to explain. If I tell you you need the lowest rate, right? If that's what the messaging I've given you for decades, that yes, this is what you want, this is what you want, this is what you want, right? You're not going to look, you're going to look past some of these other factors. And one of the biggest other factors is how much extra are you paying for set interest rate? And I think I told you that those are discount points. That is a percentage of the loan amount, right? And oftentimes the math does not work out on how much they cost and how long it takes to make that money back in your monthly payment. And so people just they don't think about this. Well, let's be real here. That's upfront money you had to pay. If you refinance, pay off the house, sell the house, any of the things, and the loan goes bye-bye, who won in that situation? Was it you? Or was it the back-end lender? Who was that? Who won? It wasn't you. Yeah. And look at who's throwing all the marketing out there. It's not the little guys like me, the little brokers of the world who are like trying to, give good information to consumers and whatever. No, it's the people who make all that money. It's the big dogs. So of course that's going to be their messaging. It's okay, Dromonte. Take that lower interest rate. Tell your neighbor you got it like a super low rate, right? That's going to be great for you. But is it?
It's like a hero villain story. It's very, very easy. It's like, hey, it's low, you've always wanted to do this. And then now it's the complete opposite.
It literally blows my mind. Like I cannot tell you how many conversations I've had with people. They're like, oh my gosh, we shop this rate or whatever, and this is going to be like $5 less a month. And I'm like, okay, cool. And this is what I always tell everybody. If that's really the case, I tell you what, do me a huge favor. Can you get me either their fee sheet, their loan estimate, depending on how early or late we are in the process, I can look at them, right? And kind of understand what's happening here. I'm like, so I can make sure we're comparing apples to apples, because you think as a consumer, it's apples to apples. And a lot of times it's just not. It's apples to oranges. And again, why would you know that? You know what I mean? Like, you don't know. And I can tell you, and this is the truth, every single customer, if what they show me, if they had been working with somebody else, whatever, and they sent it to me for like hey, can you check this out and see if you guys are better? If it's better with the other company, I will be the first person to raise my hand and say, that is better. You should utilize that. I've done it for so many customers in my career. You know what I mean? And they end up coming back as other kinds of customers later, right? Refinance or next house or whatever the case may be, because I was honest with them. But it's crazy to me because, again, you don't know what you don't know.
You don't know what you don't know. And then the other part, the back end part is, what is it? Nobody knows what you know until they know you care.
Oh yeah, absolutely. Well, and again, it's so hard for me, because also the way I was raised is to be a true professional. If you're going to do something, if you're going to have a craft, be the best at it. You know what I mean? And so like, that's what prompted me to not only do every kind of job I could in mortgage. So like, I've been an underwriter, I've been a processor, I've been mortgage compliance, I've originated loans myself, right? I've worked in all kinds of departments, in all kinds of companies. Literally, I have worked at a lender, like regular, like direct lenders. I've worked at credit unions. I've worked at banks. I've worked at brokers. I mean, you name it. I literally have worked in just about every kind of capacity you can in lending. And then I went and got a law degree because I wanted to understand like what was changing in our space. How did that look or whatever, right? Like all these kinds of things. Because for me, I want to make sure that when I am giving you advice, not only is it like I would give myself or my own family, but that I know that I am not only the expert, but I have the relationships with people where if I don't know the answer, I can also raise my hand and say, hey, this is being brought up to me. I'm not quite sure. Can somebody help me fill in the gaps? Because my space changes literally daily between mergers, guideline changes, like you name it. It is constant. It's why we have all, and I don't know if you've ever seen one of these. If you know any mortgage people on Facebook, you'll see them occasionally. This meme will pop up and it'll be like this super old looking person. And it says, no, I'm not stressed. I'm in mortgage. I'm 40 and I feel great. And it's like somebody who's like 90 years old and they like, just look a little rough like that, because in mortgage it's a lot at moments. But I love what I do and I love people. So I just can't really help it.
Yeah, I think that's the important part. It's the helping part. The helping part is also what kind of keeps the business alive. Because, yes, the money does, but the money comes with helping people. Because, again, if you were just to be like, hey, this isn't a good deal, but if this is what you want,
right?
Okay, we'll do it. Then, you won't have people coming back. And I often think of that too. Like, I'm like, hey, I say the same thing. Let's compare apples to apples. Not saying you have to go with me. I just want to see what they're offering.
Sure.
I'm really not going to try and sell you on anything, really. I would just like to give my perspective.
Sure.
And if that changes something, then I think that's powerful.
Yeah, well, absolutely. It is. It's incredibly powerful. I mean, I'm in the final stages of writing a book called, oh gosh, The Secret Sauce of Home Buying.
Hmm.
And it is a lot about the big rocks of from how you fill out an application to how you buy a house or whatever. Because I also have a course called House You, and it literally is like the full process of what it all looks like. How do you make some of these decisions? And no, it's not crazy granular in-depth stuff, but it's like making sure that people understand like how to make sure to make good decisions, right? How to not get hosed. And all of the things that I do is literally because my whole goal is to ensure that whatever decision you make, good, bad, or indifferent, that you made it eyes wide open. You know,
Hmm.
like I said, you don't if you don't want to use me, if I'm not your girl, if I don't resonate with you, that's okay, right? Like you're not going to hurt my feelings. I am not everyone's cup of tea. This I know. But what I do know is that I'm passionate about what I do, and I want to make sure that we always are doing as much right as we possibly can do. You know what I mean? And I
Hmm.
know that you're the same way. You know, we're very much aligned in that respect. Any last minute thoughts? Do you have questions at all that I haven't answered for you?
I do have one question.
Okay.
You sort of did answer it, but I'm just going to get specific on it.
Sure.
Because, so let's say somebody wanted to buy a house.
Okay.
They're going to live there they know they're not going to live there the entirety of its mortgage. So,
Right.
for example, I guess I'll just get really specific. I would like to get a house,
Okay.
stay in there a short time period, and depending on how the house is, make certain tweaks to it, and
Okay.
then rent it out when I leave.
Okay.
But those tweaks I would like to make are literally just things that I think would make the house better. And when somebody's looking to rent it, they'd be like, well, "I've never seen a house with this," and that could be something like really really simple, like just adding a bar. But I don't want to get
Sure.
too into that because I'll tell you my dream home, and that'll end up being more expensive. But yeah. So somebody that's looking to maybe stay in a house, and I don't even really know how long, because part of me is like, if I did it maybe like 5 years, because also I want to have 3 to 4 kids, so I would want to move to a different house,
Sure.
for them to grow up in. But that would be a nice house for my girlfriend and I, and maybe even just the first kid. I don't know yet, but yeah, because I'm telling you, my end goal wasn't to stay in that house. So I was like, why am I putting that much money down? It doesn't make any
Yeah.
sense.
Yeah, the only real reason to put a bunch of money down is like financially, if maybe you're not so great with money, which usually if you have 20% down, you are decent with money because you wouldn't have saved 20% then, right? And you need like the financial monthly savings, right? Like that's typically why people want to do that, right? Or they're just adamant that they have to avoid private mortgage insurance. But if your question is that you want to turn it into a rental, so first of all, I would not make any major adjustments to a house without consulting a real estate professional on if it's actually going to bring value, like beyond just making it slightly more attractive. Does that make sense?
Hmm.
Like if it is going to be an investment, so there's two different buckets when it comes to any house you own, whether it be possibly long-term investment or whether it be for your own purposes, right? Like there's improvements that I've made on homes that I've owned that have been purely for myself, but I don't count them as investment because I know that even though, yes, it adds value to the house, not really, not a lot of actual monetary dollars into that house. Does that make sense? Because
Hmm.
I have to weigh that out. So anytime you're making a decision about what you're going to alter or adjust to a house, it's highly, highly advantageous for you to actually have a conversation with a real estate professional and say, okay, if I invest XYZ dollars, roughly what percentage am I going to get back, if any? And if I'm not going to get dollars out of it, will it help me in another way? For instance, making it more attractive to renters or whatever, blah, 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 right? Sometimes what you think will be an attraction will actually be a detriment to the price point of the neighborhood you're going to live in, whatever. You just don't know. So that's again why if it's me, I'm going to ask the question. Second of all, I would say that the average length of time most people are in a first house is about 3 to 5 years, maybe a little more right now because interest rates are a little higher, and so more people are holding just for that particular reason. But is your question whether you should do it or not? Like, what is your specific question besides the improvements?
Well, now you're making me realize that others wouldn't value the bar that I want to build as much as I
Maybe.
would.
Well,
Um,
and this is where, again, you shift your mindset. Okay, if they wouldn't necessarily value the bar, but you do, can I make it where I could take it with me? So
mhm.
I can value it at the next place I'm at. You see what I mean? Like, there's ways where that can be the case where you can still enjoy it or whatever. You see what I mean? Like,
And I
again,
don't drink like that. Just to let you know, I just think
no,
bars are really aesthetically
I don't
pleasing.
care. I'm just saying, like, no, and no judgment. Like, if you drink every single night, and that's why you want a bar in your house, I don't really care. Like, again, this is you do you. Like, you have to know your own stuff and whatever. I mean, so for me, like I said, a lot of it has to do with you got to kind of think all the way through.
Yeah.
Think small, think big, if that makes sense, right? So you're gonna think small for like right now, like what does it look like, and this and that and etc. Right? The other thing is, I will say to you, let's say that you do end up keeping it for 5 years. Like that's it. Let's say that that's where you end up or whatever. Before you go ahead and buy the other house, if you do want to try to max your like pulling out equity or whatever, do it before it becomes a rental property. So try to do it like 3-6 months prior to buying the next house. If that makes sense.
Is
Full
that
cash
because
down.
it holds more equity?
No, because you'll have a lower interest rate because it'll still be a primary home. You haven't turned it
Okay.
into a rental yet. If you don't want to pull cash out of it, like let's say that you have the money again for that next house or whatever, and you don't want to rob any equity out of this one to fund this one, that's perfectly fine. You can do that. Right? But if you do, I highly encourage, because what will happen is people will decide that they need that equity when they're ready to buy, turn it into a rental and buy the other one. And I'm like, man, why couldn't we have this conversation 6 months ago? And it's because people don't think that far ahead, and it's not uncommon. It happens all the time. So it's like I said, it's not a big deal when it comes to that, but it's just me kind of good looking out for you or whatever. I also think it's funny that you think 5 years is a short window of time. I thought you were going to tell me you're like try to move within like a year, and I'm like, okay, I mean, if that's the case, like that's fine. But like I said, the advice changes based on that. That's the other reason you need an actual really good advisor, is because you then can talk through some of that. You can ask some of those questions, and they can also prompt you by asking you some questions, because the truth is that each person's scenario is just so different and so unique. Just like people, right? Just like the people who are taking out the deals, they're unique, they're special and unique. And like I said, I mean, we say all the time, like the reason we're PBJ Mortgage, making mortgage simple as making a peanut butter and jelly sandwich, is because we want your process to be simple, but we want your loan, your like what we tailor for you to be unique like you, right? Like that's what we're looking to do as far as that's concerned. Anything else? Did I answer your question?
You did, because now I'm gonna go back to the drawing board again and start thinking, because like like when you change small parts, it makes you change, like, okay, well, do I really want a house that's X amount, or do I really want to do this? Do I really want to do that? Like there's a
But
whole bunch
again,
of different things.
I'm gonna challenge you, as opposed to keep going back to the drawing board. What you really should be doing is like filling out an application with us so we can try to help you look at big picture, and then give you the best overarching like buckets, if you will, and then you making a decision from there. And ultimately you could roll this around in your head, because you're like me, you're going to overthink. You could roll this around in your head about 4 billion different ways, and at some point you're just going to have to make a call. You're going to just make the best call you possibly can make, and then that's that. You know what I mean? And we're going to advise you in the best possible way we can, and we're going to lay it out for you. And then you are, we're going to lay out some options, and you're going to just go with your gut, and you're going to say, okay, here it is, right? Like, that's what I'm going to do. That's what I'm going to go with. And then you're just going to stop asking 8 million questions, right? Not to say that if they're really important, you're not going to ask, but I'm just saying, like, at that point, you're going to have to drown out the noise, because the truth of the matter is, no matter how much you know, okay, you will not always make the best decisions. It doesn't matter. Like, that's the other thing that drives me crazy about the talking heads. They like sit up there like, oh, I'm so important and I know so much information and I never make any mistakes. I'm wonderful. Like, I'm the first person to say, I know all kinds of things and I don't do things perfectly, right? Like, the last not the house we currently own, but the last house. We were actually originally intending on keeping it as a rental property. The thought process is that our daughters all together might rent it together, as since they were all right there reaching adulthood or just had reached adulthood. And so that was like kind of the thought process. And so we went ahead and we refinanced it into a conventional loan because we wanted to free up my husband's entitlement on that house for his VA loan. Okay. And so that's what we did. Well, then we ended up about a year later selling the house. So you can argue, well, that wasn't a smart decision because you had to deal with closing costs and this and that and blah, 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 right? And you can argue all you want that, well, that wasn't a smart financial decision. Well, I mean, that may be true, but at the time, we made the best decision we could make, right? Sometimes life just doesn't work out exactly like how you think it's going to work out.
Yeah.
And so a lot of people, like, that's their thought process, like, oh my gosh, I have to be perfect. No, that's not true. That's just not true, right? You should be curious. You should be asking questions, but it does not mean you have to be perfect.
Yeah, you need to be adaptable.
That's right.
Nothing will ever be perfect. Well,
Nope,
let me not say that. If it is for somebody, I'm super proud for them. I'm happy. But
well, and they
world,
probably haven't gotten very far if they're expecting everything to be perfect. Because a lot of my life, I spent time waiting in perfection. And first of all, it's just not very obtainable. And then second of all, when you can obtain it, it's like so many other things you could have accomplished in the interim, right? That progress over perfection thing is very, very accurate and very, very true. But anyways, I'm sure our listeners are like, okay, guys, stop talking now. Don't worry, we'll have Dromonte on again. We'll continue some of these crazy questions that he's got, and we'll run down all the rabbit holes with him. But is there anything you would like to share with the audience about where to reach out to you? You're obviously a super smart guy, and if people want to utilize you for marketing, they got to know where to find you and what kind of thing you can offer them.
Yes, definitely. I'm reachable on theuprootagency.com. You can go on there and book an appointment. You can go ahead and click my name, and it'll pop up. Also reachable on the Uproot Agency on Instagram, LinkedIn as well. Those two, you just send a message and let them know. And if I don't see it, somebody will, as long as my name's in it, and we'll definitely be able to talk. Again, that's the Uproot Agency. So TheUPROOTAGENCY. Hope I spelled that right. .com.
I'll also make sure that it ends up in the links and stuff like that with the podcast as well. Well, we definitely appreciate you so much for being a part of the podcast today. And hopefully, listeners, you found this super helpful in your path to, being a good financial mastery yourself. And so, tune in again every Tuesday to hear more. And if you need some, jumping off points, there is quite a few, free tools that we offer, including a budgeting tool. So if you would like it, I will make sure that I include that in the links as well. So have a great rest of your day, and we hope to see you back next episode.